Hey everyone, I hope you can see me and see my screen. Some okays or hellos or something would be awesome. Um, uh, really would help me out. Okay, so no okays and no hellos. All right, I wonder if you can actually hear me. There. Okay, good. All right, people can hear me. Good. Hi, Sean. Hi, Nazar. Wow, we have a pretty full room today. Okay, that's awesome. Nice big attendance. That's great. Makes me a little bit nervous. Okay, and you can all see my screen. I have had some webinars where people saw my video, but they didn't see my screen. I presume everyone can also see the disclaimer, right? um, okay, so I think it's time for us to start. Um, Let me just start the recording. Oh, I think it is recording already. All right. Hello, everyone. My name is Ilan Asbel. I'm the CEO at Autochartist. First things first, put your guard down, relax. No one is trying to pitch you anything. Sometimes I get onto a webinar and people think I'm trying to sell them something. No one's trying to sell you anything. We're just here to learn. The product we're presenting today, the Autochartist plugin on MetaTrader, is available for free for live account holders. So there's no upsell, you don't need to buy anything, just relax and learn. First things first, the disclaimer, please remember, just trade responsibly, don't trade with money, you can't lose. We will be talking a little bit today, just touching slightly on something called statistics, past performance statistics. So just keep in mind that is not a prompt to trade anything. It's not a suggestion, and also past performance might not be indicative of future performance. Right? It's very important to remember. So just trade responsibly. That's the key. All right. Okay, so we hopefully you can all see my meta, and I'll give it just a moment to refresh. So today we're talking about the some of the features inside the Autochartist risk calculator. Not the risk calculator, I'm sorry. Some of the features inside the Autochartist expert advisor, and we'll touch on the risk calculator. All right. Um, so uh, um, it's not my intention today to go over all of the features and the trade setups because FP Markets really wanted me to go over some of the buttons and really just the features inside the product. But I kind of have to talk about the actual core product anyway, obviously while doing that. So what I've done is I've dragged and dropped the Autochartist indicator, expert advisor, sorry, onto the chart. And don't worry, it's called an expert advisor, but it doesn't trade on your behalf, right? So don't worry about that. And when you click on the view button on some of the instruments, what'll happen is that you'll actually get the trading opportunities coming up on your screen. So you can see here WTI, West Texas crude. So very strong breakout through a support level with a target level down in this gray area here. USD 100, what's going on with USD 100? Okay, so a breakout on the short side on the 4-hourly chart down to this gray area over here. Anyway, so you all have heard this before about how to use this indicator, and it's obviously connected to your market watch list, right? So the instruments you have in the market watch list are the instruments on which you'll get trading opportunities on the Autochartist plugin, right? So if you want to, like in this situation, we've got seven pages worth of trade setups. That's a lot, right, for anyone to digest. My suggestion really is to start reducing the number of instruments in your market watch list. I know it's maybe a strange thing. You want to keep your eye on a lot of instruments, but from a trading perspective, doing 2-3 dozen instruments might be a little bit more than most of us can chew, right? Oh, I see that, Julian, you're struggling with sound. I wonder if anyone else can't hear me, or Sean, Nazar, can I get a heads up? Can you guys still hear me? I hear. Okay, all right. So people can hear me. All right, good. Um, uh, Julian, it might be an issue on your side. It looks like everyone else can hear and see me. Okay. Um, Thank you for that confirmation, everyone. I appreciate that. So reduce your market watch window, not only for the purposes of using Autochartist more effectively, but also because it'll really kind of simplify your life. For example, I'll give you an example. Let's say you're trading FX pairs, but you want to kind of keep an eye on US markets. It doesn't mean that you have to have all the stocks, the Dow 30 listed on your market watch window, right? Go ahead and just give yourself the US 100 or something like that, right, to give you an idea of what's going on in US markets. Anyway, these are just some ideas to kind of clean up your own life and simplify your personal trading process. Mm. It is early in the morning, so I appreciate your patience with me having my cup of coffee while I have this webinar. So, um, so now obviously you can go ahead and click through all these trading opportunities, and you'll see they come up with a lot of interesting trades right now. And one of the most important things that you need to be aware of, and here we get to the features of the plugin, is the ability to filter trading opportunities, right? So this is very, very important. First things first, I'll skip to more towards the bottom part of this little filter window. If we look at the interval window, the interval section, and that is really the wrong color to use. Let me use purple. Purple's a good one. There we go. So if we look at the interval section over here, you can see that I have unchecked M15 and M30. If you're a full-time trader and you're able to watch the markets the whole day, every day, then you can trade M15, M30. Personally, it's a little too much for me to handle, and there's a lot of noise at those time intervals. So to kind of filter out the noise versus the actual signal so I'm using statistical terminology as noise signal processing, but kind of to even in your mind's eye, to filter out all the noise that's happening in the market versus the actual core movement, right, is difficult to do for me anyway. That's what I found. And then of course over here you can actually filter out what types of analysis and trade setups you want to see. So I normally look at the breakout chart patterns, the breakout key levels, and the approaching key levels. I actually go a step further, although there's no option to filter it out on the breakout chart patterns. I'll actually show you what I do when looking at breakout chart patterns. I do kind of one more kind of scan through the names over here before I look at them, and I'll give you the reason why in just a moment. Now, some of you may be asking, why are these the ones that I look at? I'm a numbers-driven kind of guy, and so I'll show you in just a moment how to click on this little icon over here and actually bring up a window with past performance, right, of how often these instruments have hit their target levels. And we do that performance on the ones that I have, the ones that I've circled. Okay, so we don't do it on the rest. And I think what we'll do is in another webinar where we actually talk about the statistics themselves and dive really deep into them. We'll talk about why we can't do stats on these on those other trade setups. But for now, take it from me as a fact that we don't do trade setups on the ones that I haven't selected here. The other thing I also like to look at, and I don't really use it much as a personally as a call to action, but I like to look at the big movements that are happening in the market, and the big movements are the ones that are really, they signal to me the exceptionally large movements that are going on in the market, right? So I'll give you some examples. Let's see if we've got some big movements going on. Okay, here we go. Here's some. Okay, here's some big movements on silver, and what that tells me, that big movement over there in that square block, is that there's been an exceptionally large movement on silver. An exceptionally large movement, meaning in the I believe in the 98th percentile of its movement, right? So 1 or 2 out of every 100 moves are this size, right? So very, very large movement. Another one on the DAX 30, as you can see. Wow, that's a massive downward move. So for me, I like to keep a lookout on these things. Obviously, gold, man, that's been rallying forever. I can proudly say that I've had a massive position on gold for quite a while. So I'm loving this movement up. Although I think it's running out of steam, but that's my personal view. Again, no recommendation to trade either way, but that's my personal view. But again, just to give you an idea of what we look at. Now, I'll tell you what the kind of things that I look at when it comes to completed patterns, and I'll mention that in just right now when I show you how to open up the stats. So if you click on this little world, it looks like a little world or globe icon, you'll get 2 different links. One to open up the Autochartist web application, and one to open up your performance statistics. And I'll show you what those look like. So the web application looks something like this, and you get pretty much the same results that we have on the MetaTrader. You get them in the web application. You're welcome to go through all these results over here. Personally, I'm not sure why I use this, because all this information is already contained in the MetaTrader plugin. But anyway, it's up to you what interface you like. The thing that I want to show you is the stats, and the stats, again, just to repeat, is brought up by clicking this little world icon and copying and pasting this URL, this performance statistics URL into your browser, right? And this is what the stats window looks like. And if you click, as I said, remember, we have breakout chart patterns, breakout key levels, and approaching key levels. Those are the ones on which we do the performance stats. And again, we'll discuss that later, exactly why that is. But you'll see that when you click through that, on average, in the last 6 months, the period is over here, we've identified 22,500 of these trade setups, and 14.5 have hit their target regions of about 64%. Again, past performance may not be indicative of future performance, guys, so please just remember that. But the thing that I want to highlight is some of the things that I look at. I look at what I call chart patterns with horizontal components to them, right? So ascending triangles, descending triangles, double tops, double bottoms, head and shoulders, inverse head and shoulders, right? Rectangles. And I don't really look at, well, I don't want to say I don't look at them. It's interesting, but I kind of use them more as information, are the kind of the trending patterns, right? The ones that are trending up or down, like channels and wedges, right? These are the kind of things I look at from an informational perspective. And again, there's more breakout and more information about past performance of specific symbols, etc. You can go through this in your own time. Again, we'll go through it in a more detailed statistics webinar. But now you'll understand, in the next click, you'll understand why I actually look at those horizontal levels. Because when we look at just the specific indicator called key levels, right, you'll actually notice how even the average percentage here has gone up 10,500 over the last 6 months, of which 7.5 were correct, about a 75% average. And you can see how the performance for the horizontal levels, support and resistance, is really, really high. It gets even higher when we look at the approaching levels, the approaching key levels. Approaching key levels, let me show you an example of what that looks like, just so that we're all on the same page. Here is something on France 40. I've got to just shift my webinar software out so I can show you what that looks like. Okay, there we go. So you can actually see the blue line over here, if it's all clear to you. So this is an approaching key level. It's saying to us that this price is approaching this level. Now notice, one of the major influencing factors of why that the statistics are so high is because the approaching key levels are really close to the actual current price, right? So you have to be very, very careful when you trade with them. And maybe if I have time, when I've gone through what I wanted to go through in this presentation, I can talk to you about different strategies around trading these key levels. The bottom line is such that the horizontal levels from a past performance perspective seem to be the best performers, and so that's what I look for when I'm looking at these trading setups, right? So, for example, I ignore this triangle, pennant, rising wedge. I definitely look at these support levels here, and then let's quickly see if there's more triangles, channels. Pretty much ignore them. Rising wedge, again, I ignore it. Triangles, I ignore them. So right now, nothing really. Oh, ascending triangle on the Australian dollar. Let's see what that looks like. Maybe I was too late for it. Okay, so the ascending triangle I would look at, because that has a horizontal component to it, right? So you can see that green line, that has a horizontal component. I love horizontal lines, and so that is definitely the kind of opportunity that I'd be looking to trade. Again, this is my personal style of trading, very much based around the past performance stats. Right, that was my last sip of my coffee, so I should be up at close to 95% CPU now. Right. Anyway, you get the idea now. I hope if I'm speaking too fast, you can watch the recording. In the next little window, which is a little cog window here, you can you can look at the this next little cog over here. Look, sorry, by the way, sorry, I'm distracted for just a moment. I see some questions coming up. Ergo, Andrea, I will answer your questions in just a little bit. I'll come back to answering them. There's a little bit I want to get through, and then I'll come back to questions. So, but keep them streaming through, you know, if you've got questions, and I will get to them. So again, back to my original train of thought. If you click on this little cog icon, this allows you to subscribe to a daily market email, right? And what that is, it's not a live application of any sort. It's just a once, twice, or 3 times a day email. You can choose how many you want to subscribe to. That's sent to you in the morning of your session with a kind of a 24 to 48 hour outlook, technical outlook on the market, right? So for me, that is kind of a roundup on the market. I personally don't trade directly off that email, right? For me, it's just in the morning, it takes me literally 30 seconds to glance through it. Okay, it might take you a little longer because maybe you're getting to know what it looks like, but after you read 2 or 3, so maybe it'll take you 2 minutes to read the first couple, right? But after that, it's just useful just to look through it on a just quickly to see if there's any major trends that are going on in the market, right? And then you can obviously go into your Meta and then use the plugin to get the exact details of what's actually going on. Again, I look at the kind of the big picture. Oh, there's a big trend happening on gold, or there's something else happening on the euro or whatever it is, and then I kind of delve more into the details, get myself stuck in the mud in terms of actual trading. So here you can choose the report you want before the open of Tokyo, before the open of London, or before the open of New York. You can put your email address, oh sorry, not your email, you can select your language of choice, and you click subscribe, and you can see here that I'm subscribed to the FB Markets market report US session, right? So it gets sent to me before the opening of New York. That's because I live in the great state of Texas, and obviously I speak English, and so that's the report I get on a daily basis. And my email address is at the bottom, and I click save, and I'm done, right? And then I'll get it in the mornings. If you want to unsubscribe from it, you can see there's no unsubscribe button. Sorry, you're subscribed for life. No, I'm kidding. You're not subscribed for life. Don't worry. There's a little unsubscribe button at the bottom of the email. So if you don't want to get those emails anymore, just click on the little unsubscribe link at the bottom, and you'll be done. We don't spam you. We definitely don't spam you. So we honor our unsubscribes, unlike some companies on the internet. That's that button over there, and then the last thing I wanted to talk to you about, obviously, is the risk calculator, which, in my opinion, is the best thing in the world that we've ever produced. If you haven't watched any of my webinars talking about the risk calculator, you're missing out. This is honestly, in my opinion, I think one of the best tools available in the market. I use this on a daily basis, every trade. Unfortunately, my account only has, it's a little demo account, I only have $100 and odd in it, so I can't actually place a trade, but I'll show you how awesome this tool is. I'm looking at the Australian dollar, US dollar chart, and daily chart. Let's say I want to take a long position and I want to risk $100. So I would set my orange line at the place where I want to set my stop loss, right? And notice how I don't even care about how many pips I'm risking, right? All I care is about where I want to set my stop loss. So let's say I want to take a long position, because the way I look at it, I see consolidation here. I think this is a good place to take a stop loss on a long position. So I set my stop loss over here, my stop loss here, and then what I would do is I would click calculate. I would say I want to risk $100 on this trade. Of course, this is unreasonable because I only have $100 in my account, but let's say I had $1,000 in my account, and it would calculate for me how much volume to trade, right? So if I had to take a position right now, I would trade 0.1 lots with a stop loss of over here, right? And if I buy in the market, obviously I can't trade, my trading is disabled. Despite the fact that I'm risking close to 70 pips, I'm only risking $100, obviously not taking slippage into account, because I've set my volume correctly. And now I can do the same thing on other instruments. So AUD USD is easy, it's 10 bucks a pip, right? So that's easy to calculate, but you get things, more complicated things. What about Gbp Jpy? Let's look at the hourly chart in Gbp Jpy, right? So let's just say I want to trade Gbp Jpy and I want to set my stop loss over here, and I want to trade long. Again, and let's say I want to trade $100. I can see that here I could trade a 0.15 lots. So in this situation, I would trade 0.15 lots with a stop loss at 136.13. And if I buy at market, again, I would, despite the fact that it's two different instruments. I remember the first trade I did on AUD, on the Australian dollar. The second one, I'm trading GBP yen. I'm trading two different risk sizes in pips. Well, I think the first one was 70 pips. This one is 50 pips. But I'm only risking $100 for both because my risk calculator tells me to trade the volume for my risk, right? So that's very important. Some people, they move their stop loss around to minimize their risk. Professional traders don't do that. Professional traders choose their level according to market conditions and volatility, and then they adjust their volume to manage their risk, right? So just to give you a bit of a change in mindset, but this little risk calculator does all this kind of conversion for you. It's a awesome tool. Look at some past webinars. Otherwise, I'm sure we're going to have more webinars coming up about this little tool, and I'm sure that I will get questions from some of you now about that. Okay, so I feel like well, I have been talking for 24 minutes solid. So let me look at some of the questions that are coming up. Okay, so our CEO PC has left. Yes, this webinar will be recorded. Correct. Okay, so Ergo is asking, how does Autochartist know that it was correct on a pattern? So I'm assuming, Ergo, that you're talking about the statistics, right? Okay, so let me show you how we count what is right and what is wrong from a statistics perspective. So let me bring up one of these results. Okay, here we go. So you can see a trading opportunity on West Texas, and when there's a breakout, you'll see that we provide a target region. So for us, what we do is we say, this is a pattern length. We allow that same amount of time for the price to go past this level over here, right? So if this price moves towards this level, we got it right. If it doesn't, moves the other way, we got it wrong. Okay, because there are so many different types of trading strategies, entry strategies, exit stop loss strategies. I know people that use fixed stop losses. I know people that use trailing stop losses. People that use a moving average as a stop loss, right? There are so many. I mean, I can give you 10 different stop loss strategies right now. So what we've done is we don't actually analyze the performance based on stop loss. All we're trying to do is say, was our forecast correct? That is, did it hit this region over here? That's the only thing that we're looking at. Okay, so it's independent of stop loss. Yes, so I know what you're going to ask. What happens if it goes here and then comes there? We still, from our perspective, we still regard that as a correct trade, which I know it's not theoretically correct because you would have hit a stop loss, but we have to try and provide the traders with some kind of transparency as to what did and what didn't perform in the past, right? So we're not trying to create a trading system that's going to make you a gazillionaire overnight like some of the scams out there on the internet. We're trying to be genuine and trying to really provide as broad stats that are applicable to as many people as you can. So is it a perfect statistical system? Absolutely not. Is it a good indication of what performs and what doesn't perform? Absolutely. Yeah, absolutely. Okay, so let me continue with asking with those questions. There's a question from Andrea. I would like to watch this webinar again. Can I download it, or do you have a link? Right, so I'm going to actually ask some of my colleagues that are helping me on this webinar to send the link across to everyone, the download link now. Okay. Nizar, I'm glad I made you laugh a little bit. I try to keep my webinars lighthearted, right? It's so David, yeah, there will be a recording. It should be on FP Markets YouTube very soon. Otherwise, contact your your account representative. Ergo, you ask a great question. So how does a trader know when he goes wrong? Well, you know when you go wrong when you've hit your stop loss. But I want to try and maybe talk about that for just a moment, because I think you hit on a really good point. Let me switch to a slightly lower time frame. And I want to show you some things which I use, and some techniques I use to know when I'm wrong. The one thing that I absolutely hate, I hate getting stopped out because of market volatility, right? So unexpected market volatility. And many traders forget that different instruments trade with different volatility at different times of day. There's news events coming up, all kinds of stuff going on in the market. And they set their stop loss and take profit levels without taking that into consideration. So when I look at this West Texas right now, I'll show you what I see. I see a consolidation level over here. I see more consolidation over here. I see more consolidation over here, right? For me, those are kind of the key consolidation levels. Of course, there's the one which is drawn by the actual support level by Autochartist, so I'll remove that one. Those are the levels that I see. So if I'm going to be trading, oh, actually, there is one more. It's this one over here, right? So when I say consolidation, what am I talking about? I'm talking about consolidation at those levels, right? You can see distinctly how these are important price points in the history of West Texas, right? So for me, if I was trading, let's say short on this instrument now, these are the levels that I would be looking to as my potential stop loss levels, right? Again, it's for you to decide. Of course, I would look at this level too, right? The actual support level itself, because the price has moved a little bit. If I was trading a few hours ago on this candle that broke through, obviously then I wouldn't consider that as a stop loss level. I'd look at the previous consolidation as a stop loss level, 41.17, that is, right? So how do you know when you've gone wrong? Is when you've hit your stop loss, right? But the key here is to choose a stop loss based on, or to take into account market volatility. And so let me erase some of these objects, some of these drawing objects, because I want to show you something that Autochartist gives you. If you can actually see this, I hope you can see these lines on the right-hand side. I'm going to try and highlight them. This here is the expected price range movement for the next hour. This here for the next 4 hours, and this here for the next 24 hours, right? This is non-directional. It's just the volatility we're expecting in the market. And these lines actually open and close as the volatility is expected to increase and decrease in the market, right? So if I'm looking at some of these lines that, or some of these levels that I was looking at before, I can see, for example, that this consolidation levels over here, the actual line over here and over here, would happen somewhere in the next hour to 2 hours, right? Over here would happen somewhere in the next 4 hours, right? So it kind of starts giving me an idea of the kind of volatility where I can expect. So obviously that will fit in with your lifestyle. If you're, let's say, taking your kids to school right now, or fetching your kids from school, or going out for coffee with your friends or lunch, you don't want to set your stop loss to be hit in under an hour, right? You kind of give yourself more room, right? So immediately you would eliminate that kind of a level and start looking at those two levels. Now, the thing is, from an actual risk perspective, you don't have to use those lines to you don't have to use the Autochartist expert advisor to see that. You can actually see them from the risk calculator. All you do is you click show expected trading ranges, shows you the same ranges. So from a risk perspective, you see it immediately, right? So over here, if I move my line up to this level here, it's actually telling me, this is where I'm setting my stop loss, trade a volume of 0.16 if you're risking $100, right? Or if I'm trading up over here, trade 0.07 a volume if I'm risking $100, right? So I don't even have to click this calculate button. I can just move this line. There's a little shortcut. If I'm trading long, obviously then my volumes go over here. But I really want you to have a look at that risk calculator to make sure that you're using it along with the expected price range movements. Nicholas, I do take your point. Okay, so Nicholas is saying, with the greatest respect, a trade which reaches a target but hits a stop loss on the way cannot be a winner. You have just invalidated all statistics. Nicholas, I actually disagree with you. And I'll tell you why. You're right. If you want to backtest Autochartist in an actual trading system, there is an API in Meta. You can write your own backtesting, or you can pay someone to backtest it for you, or you can go ahead and do it yourself, but or monitor it for a few weeks yourself. I have found that in my personal trading, that the statistics are very indicative of what does and doesn't perform in the market. As I mentioned before, specifically in relation to some of these horizontal levels, I use them on a daily basis in trading. And so I can tell you from experience that things like triangles and kind of these trending patterns, very nice in hindsight. And as the stats show, they're kind of like 50 to 60% accurate, which is in a way 50-50 when you take costs into account. But the horizontal levels, definitely the greater stats in my past experience, trading experience, have certainly moved the probabilities in my direction. So yes, they're absolutely not perfect. Ideally, you would set a stop loss and a take profit and see how it performs. But certainly from an indication of what has performed in the past 6 months, I found them very useful. Yes, that's right. So ergo, definitely time is used. We only allow a limited amount of time. In fact, 1/3 of the pattern length is normally what I look at. So if I have to take the risk the Autochartist, the scanner back onto the chart, and I look at that, where was that? Here we go. Let's look at that Brent example. Sorry, not the Brent. Yes, the Brent example here. If my chart pattern is approximately this long, I would look at about 1/3 the pattern length. So that's how much time I would give it. This is L. This is L. This is how much time I would give it to hit that level. If it doesn't go there, I would pretty much close my position, because I think, as Nicholas pointed out, like, you don't want to give this thing infinite time, right? You kind of want to get in the trade, make money or lose money, and then walk away and go to the next trade. You don't want to use up margin and just keep positions open just because you don't want to take a loss. There are tons of trading opportunities in the market, whether you use Autochartist or other tools. There's tons of trading opportunities all the time. There's no need to use up margin. Just get out of the trade. If you're wrong, you're wrong. Move on with your life. That's my opinion. Okay. Ergo, one last question I'll answer, because I think I've reached the end of my time. The historical data that's used to determine key levels, we look at up to, I believe it's up to 1 year of daily data. I think it's 3 months or 4 months on 4 hourly data, and then it scales down. The amount of data that's used for the these expected trading ranges, that is 6 months worth of volatility data that we look at to base the expected trading ranges on. Okay, and so with that, oh yes, sorry, Ergo. Yes, of course, they get recalculated all the time. Every 15 minutes, everything is recalculated. So, so yes, I'm just telling you how much historical data is used, but it's everything's recalculated every 15 minutes. Okay. So, yeah, Nicholas, thank you for that. Nicholas says a good, honest presentation. Thank you. Nicholas, no one here is trying to pull the wool over your eyes. If you're buying a $50 EA that's going to make you a millionaire overnight, you got to think something is wrong, right? So just watch out for for scams on the internet, right? If people are telling you you're going to win 95% of the time, there's clearly a problem. Because okay, so anyway, everyone, thank you very much. This webinar was or is being recorded. I hope you've enjoyed it, and we will, I hope, reconvene in the next few weeks. We'll see what the next topics are. Hopefully something on risk calculator, more detailed risk calculator analysis, and then a more detailed presentation about the statistics. Thank you. Enjoy the rest of your day wherever you are in the world. Bye. You guys are too kind. I see all the comments coming through. Thank you, everyone. Really, you're very, very kind. I really appreciate the kind comments. Thank you.